Good morning, everyone, and I'm back. Minus my voice, but I am back. It is Monday, March 14th, and this is Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for the day. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. What are we looking at to start this week? Interesting week in the markets. We'll talk briefly about the markets, the equities markets in China. Even though they're closed at the moment, we are going to take a look at what's going down on over there, because the Hang Seng, it's down 5%. Uh, they're having some COVID issues, and meanwhile, U.S. equities are looking to open in the green. At least all but the Nasdaq. Nasdaq's is kind of struggling there, going back and forth between red and green. We've also got oil trading lower, which is kind of nice. After that big spike up, we got oil down a bit. So we certainly have some things to look at and some things to talk about for what's coming up later this week. Before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And just briefly, if I just show you the Chinese index, the Hang Seng, if you take a look, it was, it wasn't, it was just last week, it was trading up near 15,000. Now trading down toward, in fact, at one point, it's testing the 13,000 level. That's a pretty significant move there. And again, they're having to lock down due to COVID. So this isn't over. And it probably doesn't help that the Kremlin came out and said, we have not asked China to come in and attack Ukraine with us, which means they probably have China come in and attack. I'm not sure China's going to fly over with their bombers and start killing people. But who knows? Are we on the cusp of trying to do World War III? Who knows? I don't know how far they're all prepared to go. In any case, I'm going to flip it, Brian. I'm going to flip it over to you. We could talk about some of certainly what's going on in oil, and take a look at some of these other headlines and what we have to look forward to coming up this week, because we got the Fed too. So plenty to be looking forward to this week.
Yeah. So again, typical Monday morning, we're waiting to see what the U.S. trader is going to step in and do today. The only big mover right now is really the yen is getting really massive amounts of weakness, and again, it's because it's in that geographic location. Some comments over the weekend, but the biggest thing right now that is hitting the markets is China locking down a province and actually increasing some restrictions. The biggest problem with this is, and again, China's at the stage right now where I guess the World Health Organization is trying to downgrade them from the pandemic. But unfortunately, again, there's multiple different things out here. You're seeing the different indices drop 3%, 7%, 5%. And again, seeing COVID cases on a rise is not necessarily really at this stage what you want to see. In the United States, we're kind of coming out the other end, but remember, they're kind of two different ways of handling the same problem. Theirs was see the spike, shut it down. Problem is, this is where all the supply chain disruptions originally started from. With everything else going on, having supply chain disruptions are only going to even further kind of, I guess, make the inflation go a little bit even more crazy. So it is set up to be an interesting week. But again, closing down, this was like the root of the supply chain problems. That's why we're seeing the overall markets more or less all kind of drop to the downside. I was just looking at Apple. Apple's actually like $3 or $4 down, is where it's going to open. Indice wise, they're all, they've all in the last really 2 hours taken real big drops down, and that's because of the lockdowns in China. They're kind of right where we were on Friday, which again tends to be a good buying area, but it's already kind of hit that one time and kind of bounced. I think the real big kind of question is going to be is how much are they really going to harp on the lockdowns about what it could mean. The reason why is if it was just China having lockdowns, it probably wouldn't be as big of a deal. But knowing that there could be supply chain shortages again will increase inflation naturally. And the Fed starts talking tomorrow. They have a 2-day meeting, and tomorrow's day one. There was comments this morning about it, talking about, again, trying to find oil. Oil is down right now, about 3%. It's not really much different than where we were. I mean, it's right at the same level. Actually, it's a little bit above where that big spike was last Wednesday that we saw, that big collapse. Oil again, obviously more of a bearish mindset if we're talking about lockdowns and supply chain that is not great overall. And there was talks all weekend about basically going and talking to Venezuela about increasing output. And I know this morning on CNBC they mentioned they're like, listen, we have the ability to produce more than anybody. Why we're begging other countries to produce more is very kind of a questionable practice that we're not, motivating and stimulating our, domestic producers. So yeah, this was actually a member of, I forget what the guy's name is. I had it and now I've lost it, but it was some interesting comments. And basically, he has experience with the Fed. And he said it will definitely play into this week, particularly Wednesday. And they were actually talking about a 50 or 100 point raise is what they were trying to. The guy's like, yeah, absolutely, something has to be done. We'll see, how far they're willing to go right now. But again, a lot of moving pieces there. So say, oil is definitely down a little bit today. Would I be willing to say, hey, listen, we definitely need to go short? Not really. I'm actually more in the bullish camp right now in oil. I still think there's going to be, some more supply chain disruptions, and they've already said, the oil agencies have said it doesn't matter if everybody in the rest of the world picks it up, we still can't make up for what Russia has. And again, the longer that conflict goes, I think the more and more Russia starts to get a little bit weird with their supply there. And we'll see where it goes. But natural gas is also down a little bit today. Again, took a kind of a hit from where it was last week, and now it's starting to rally back up again. Natural gas is kind of in the same scenario. They're both, when we say energy, we're kind of in the same kind of window there. And then the other commodity, which is kind of, under kind of a little bit of heat right now, is gold and even silver to that extent. We talked last week about getting them wherever you see a pop in these things get short. There was one on Friday afternoon. We had that little basing area here. We got a nice little rally, and then it's just continuing to collapse back down again. We had this area marked down in 1960, and we talked about it not being really great because it pushed all the way down here. It pushed down again and it pushed again. So it's not really an area we're looking to hold. And we actually talked about targets down to 1938. That could come in later today. But, as people start saying, hey, wait a second, the Fed is talking about rising this week and there could be inflation. This one will probably come into more play. But I'm still, right now I would say if I have to put kind of like titles on things, I would say oil bull, I would say gold bear. Just because remember, crushing inflation is kind of an anti-gold device. And that's what we're kind of seeing this week. So,
yeah. And the way that works, as interest rates go up, the money that you've got in gold, it's not a performing asset, right? Gold, it actually costs you money to store it. And so any money that you put in gold, if you can start getting a return through interest on anything else, it's going to make everything else look much shinier than gold. So as interest rates start going higher, the idea of holding gold as a store of value goes lower because it actually costs you money to keep it. So, and you're giving up opportunity costs. So it'll be interesting to see what happens with gold once we start raising interest rates.
yeah. And it's hard to say today whether it's a risk on, risk off day because all the commodities are down. The indices are up just a little bit right now. It's kind of where are the contagions. The VIX itself is a little tiny bit positive, but not much higher than where we closed on Friday. And again, there wasn't, no nuclear bombs were dropped this weekend. So that obviously could, deteriorate very, very fast and help stimulate all the indices higher. And then even kind of some of the risk assets, Bitcoin is technically in the green right now, but it's kind of where we were basing last week. We had that quick drop over the weekend, and then it really just popped right back up again. So they're kind of in an interesting spot as well as bonds. Bonds are opening a little bit lower. So the way that it looks like it is more risk on today. And again, we'll kind of, typically risk on, you're seeing commodities do a little bit more, but again, all the commodities are kind of they're having a typical Monday morning. And then currencies for the most part are basically flat minus, anything with the yen. Dollar yen up, pound yen up, euro yen up. Aussie yen down a little bit, but I think that's more of a gold story. And the hard part about the Aussie yen was the fact that we'd had major sell, like higher level selling occurring up here in the 85-80 range. And that's what we ran into. So it's hard for it to rally higher when there's larger time frame, sellers up top. So that's the only yen trade that is not performing. And I would say if the yen does start to flip, this would be the first one I'd want to jump into is the Aussie yen because it's already, it's already started to build kind of a base to the downside. So, but right now, you're seeing again super yen weakness, commodity weakness, and then again indices overall. I guess NQ is the one that has really kind of fallen the most. And again, had a nice little Harry Potter from that little short area that we had last week over the weekend. Again, we do have a little bit more room to run to the downside, so it'll be interesting. I think the first half hour. is really going to be telling of what we're going to look like today. And I think the biggest contagion is going to be again the Chinese story. What will it look like? How long is it going to be? And if we get any more additional data from it. So
Yeah, I mean, what do we know anything if they're having to do lockdowns? I don't know. Is this a new variant?
they haven't said. China doesn't give us that information. It's undisclosed.
Hey,
There are new variants out there, but none of them. They're all Omicron variations so far, is what we've heard. Um, but it's not so much that it's the new. They're not scared of the new variant. It's just that ours was kind of just masks, right? China's is we're going to lock down everything, and when they mean lockdown, it's like an actual lockdown. It's like, hey, you can't cross this street, like don't go anywhere. And they're civilians again. They never had the same rates and deaths that we had because of their policies, but it also means that it may extend beyond where we've gotten more of a natural immunity to it because of Omicron. They don't have the same type scenario because of the way that they handle it. So we'll see. Nobody really truly knows what the best way to handle it was. Even hindsight yet, we don't even really know. But again, lockdown and restrictions goes back to the same problem that we've had for the last year and a half is that supply chain. And that was what started the inflation story. And then again, combine that with the discussion tomorrow about how much we raise.
yeah.
Remember right now, and actually, right now they still have the forecast in. This is where it gets interesting because right now the forecast is only point. Where is it? Um,
Well,
is
uh,
only 0.25.
it's
So
funny. It depends on where you look. I mean, some people are saying the forecast is a half. I mean, that decision is actually on the 16th, isn't it? Is that Wednesday?
it's Wednesday. Yeah, the meeting starts tomorrow. It's a
The
2-day
meeting
meeting.
starts tomorrow. The meeting starts tomorrow. The decision comes out Wednesday. Now we do get PPI tomorrow.
Hmm.
So we do get another number before that, but yeah, this is going to be an interesting week.
Yeah.
So yeah, I guess we get to kind of see how everyone starts digesting what's going on in Russia, Ukraine, what's going on in China with COVID, and
Hmm.
then how's the U.S. going to handle inflation? So there's going to be a lot of things getting
Yeah.
thrown fast and furious at
Hmm.
us this week. So with that, it just we're going to have to wait and see a bit before we get more into it. Any questions for Nadex, please email us, customer service at nadex.com. Brian and I are also very much accessible. If you've got questions for Brian, you can email Brian, support at keeptradingsimple.com. At my email, todd.rich at nadex.com. Yeah, there's that question, what the contingent of Evergrande. Um, so, you know what? Before we jump out, people are asking, reversals, levels. Is there anything we should be looking at? We know we talk about the 10-10-30 reversal. Before we
Hmm.
cut out, is there anything? As my dog jumps off my lap, tears my headphone off
Let's
my
say
head.
you cut out right now. Yeah, I mean,
Okay.
what you could do right now, I mean, look at all the Globex highs and lows. Those are going to be all big things that people are looking for. So, like, this is the ES, drop it to a 15-minute. If you go out there and you can throw, like, okay, listen, in overnight, where was it? You're going to say there and there are going to be our tops and bottoms. Those will be, basic triggers that people are going to be looking for. But as far as kind of where the reversals go, obviously the level we have marked off right now, we're kind of bouncing off of it a little early. Things like, areas like this, right? This is just happens to be, and again, I can mark it there. That just happens to also be the kind of where the Globex high is. So if price is able to rally because, hey, listen, we haven't dropped nuclear weapons. I don't, there's mustard gas. There's no mustard gas in the streets. That's the potential area for a 1030 reversal. It acts as a trap as price comes up. People will say, hey, listen, we're breaking through the Globex high. Now we're going long. Well, it also just happens to be an area where sellers are coming in that in the profit taking, you would basically have, hey, listen, here's the open. It goes straight up. People are like, wait a second, that's a nice run up. Well, the reality of that situation was this: that was more or less a long position from here up. Again, bouncing off the gap from Friday and one confirmation test here. If it goes up to here, there's your 1-to-3 risk to reward ratio, which just happens to be right where sellers are also confirmed on the top side. So they'll get their 1-to-3. They'll start selling it. All that selling pressure comes in at 10:30. At the same time, people see this and say 10:30 is right there. People see this and say, "Oh, look at that! I just broke the Globex high." Well, the Globex high just happens to be a 1-to-3 risk to reward ratio trade based off of Friday's gap. So
So that's one for the
in
ES.
1 minute, there you go.
There. Yeah, it's a contagion of Evergrande. No, actually, when we were saying contagion, because there's the Evergrande situation. No, when we're talking about contagion, we're talking about contagion of COVID. China is locking down to COVID starting to spread again. So just as we start looking that we're coming out of the pandemic and maybe just going endemic, there is something going on in China with COVID, and they are having to lock down certain regions. We do not have any information about that, but that's part of why you're seeing the Chinese index getting clipped. Why the Hang Seng's down 5% is, and we don't know. There's no information coming out on what it is that what disease is spreading, and if there's some new variant that we're going to have to worry about.
Gerald,
So,
Eastern.
so
Gerald, everything I say will always be in Eastern. Nobody does anything off
Oh
Central.
yeah, sorry.
Sorry.
Oh yeah. Oh, and yes, and whenever we talk about times, it's always
Always Eastern.
Eastern as a standard. We do that as Eastern so that there is never any confusion. Um, so hopefully we resolved that. All right. So a couple of bumps in the road as I start getting back into the groove. Brian and I will be back tomorrow morning. Once we'll have an opportunity to see how the markets start really setting up for the rest of this week, going into the Fed decision or the Fed announcement on Wednesday. Until then, good luck in the markets. Brian and I will catch you tomorrow morning. Thanks for joining, everyone.